Welcome to this webinar about SeasonHunter, about seasonalities. I'm Giovanni Trombetta. I will present myself in a while. Fabio will do the same in a while as well. I start sharing my screen. So, first of all, thank you for being here. This webinar is dedicated to market seasonality and the latest development of SeasonHunter that, as you will see in a while, is the tool we are going to use during the session and that we used to use during the week for our option operations. So during the session, we will present the platform, showcase real-world seasonality, analysis examples, and we will also answer questions from the attendees. So feel free to write in the chat, in the YouTube chat, please, Fabio, make a check.
I think it's fine. I already welcomed
great
the channel, so yeah.
Great.
We have right now we have 3 participants, so it's growing up. So
yeah, for sure. I will tell you a couple of things before starting. We will also introduce some of the newest features recently added to SeasonHunter itself, including the new Market Watch, isn't it, Fabio? The new Market Watch tab, designed to help, let's say, traders and investors quickly identify seasonal opportunities across multiple markets. And please note that this is the first of 2 English language webinars designed to accommodate different international time zones. Today, we are optimizing for Europe time zones and the Americas as well. The World Championship is going to start in 1 hour and a half, so we have to rush a little.
Unfortunately, Giovanni, Italy is not playing.
I know. Unfortunately, I know very well, but the first match is Mexico against South Africa, I guess. So very interesting. In any case, the attendees joining live will have the opportunity to interact directly with me and Fabio, ask questions, and explore SeasonHunter's latest features in real time. Of course, a recording of the session will also be made available to the registered participants. So during next hours, next days, you will have this opportunity. Just 1 minute here. Before looking at any examples, it's important to clarify what SeasonHunter is and what it is not. So SeasonHunter is a statistical research and screening tool. All the analyses presented by ourselves today are for educational and informational purposes only. This is very important. Even if we are using this instrument, this tool, for our real operational activity, historical seasonal patterns do not guarantee future performance. A seasonal edge is a probability, very important, not a prediction. So every investment decision remains the sole responsibility of the investor. Trading and investing involve risk, including possible loss or even complete loss of your capital. Nothing shown in this webinar should be interpreted as a recommendation to buy, sell, or hold any financial instrument. So our objective tonight is to explore statistical behavior in markets and discuss how these patterns can be transformed into more robust trading structure. So with that clarification in place, let's start by defining what we actually mean by market seasonality. So, just a few words about what Gandalf Project is. Gandalf Project is an Italian fintech company. It's based in Italy. We are working in the application of artificial intelligence to the financial markets in general. So overall, we operate at the intersection of finance, technology, AI, the hype of these years, combining data science, engineering, and financial expertise. As you can see, our core activities can be grouped into a few areas. The first one is the financial R&D, research and development, then trading and process optimization, financial services, AI solutions across industries, and finally, education for corporate and retail professionals. This is our team. Fabio is one of the last that has joined our team, and is also, I would say, one of the strongest R&D experts on seasonalities, and not only in this field. Let's dive into the agenda, not to waste our time just talking around. We are going to talk about understanding market seasonality from a theoretical point of view. Then we are going to talk about causality versus correlation, the statistical significance challenge. Then we are going to introduce the tool, the software inside the website called SeasonHunter that you can find at SeasonHunter.com. Real-world case studies from the US markets. Me and Fabio, we will show a couple of them. Fabio, what do you think?
Yeah, that's true.
And then, of course, we will be here for you just to answer to your questions, curiosities, and whatever you want. So let's dive in seasonalities. What is a seasonality? Because maybe you heard about seasonalities, talking about commodities, talking about grains in particular, or precious metals, or meats, even meats. Okay, seasonality is not a prediction. It's a recurring statistical tendency observed in historical data. So a seasonality pattern, what is? A seasonality pattern occurs when a market, for instance a stock, a commodity, or even an index, tends to behave similarly during a specific period of the year, on daily basis usually, but even on intraday basis. The key word is probability, not certainty. This is a crucial point to remember, to take in mind. We are looking for recurring patterns that have appeared often enough in the past to deserve attention. And Fabio will talk about the score, for instance, the probability, the percentage probability. This and other metrics like this. These patterns are derived entirely from historical observations. However, markets evolve, so seasonality can weaken, even disappear, or reverse over time. We will see some examples. This is why seasonality should be viewed as a statistical input rather than a standalone trading signal. So looking at the example, we are going to see a winning rate of 61%, like in the slide, means that the pattern worked in roughly 6 years out of 10. That may represent an edge, but it also means it failed almost 4 times. Don't forget this. 4 times out of 10. Therefore, seasonality alone is rarely sufficient to build a robust strategy, and with Fabio we will deepen this aspect together. Seasonality can provide a useful statistical edge. The challenge is transforming that weak edge into something economically meaningful and robust, if possible. So if seasonality provides an edge, the next question is, how reliable is that edge? So let's look at the statistical significance of this kind of patterns. Here you can see some examples. For instance, in the bottom right, you can see the daily seasonality. This is for gold futures. We are not talking about stocks in this moment, but you can see it's very evident. I would call it the run-up tendency of the Friday for gold futures, and of course as well on GDX or other ETFs based on this commodity. On the top right, you can see the seasonality day by day, year by year, and the tendency month by month in the top left, and the aggregation of the behavior year by year on the top left, on the bottom left, sorry. These are just examples in which we take the average of the behavior of each instrument in that period of the year. If we enlarge one of the pictures I've shown you the slide before, you can see, for instance, again, for gold future, this is the example I would like to make here. You can see at the starting point of the year, from the 1st of January till the, I would say February, you can see an evident behavior to grow in price for gold future. And this could be assimilated as a seasonality in this example. It comes from the calculation year by year, day by day, for all the years of historical data that we have available. In that case, from 2007 till today. Again, this is the aggregation year by year, in which you can see that, especially during last years, the results were not that bad, I would say. So, most seasonal patterns exist, but their statistical strength is often weaker than many investors expect. The question is why. When people hear that a pattern works 60% of the time, they often assume it is a strong edge. But in reality, most stock seasonality signals have only a modest statistical significance. The winning rate is usually between 55% and 65%, not over 90% usually. But you will see sometimes it's possible even to find something above 70%. So why are these edges weak? For many reasons. I will recap a few, just to talk a while about this topic. Historical samples are limited. This is the first. Markets evolve continuously. This is the second. Exceptional events can distort results. And even once a pattern becomes widely known, market participants tend to arbitrage it away. Exactly what me and Fabio are doing, in some sense. Winning rates are above 50% in some cases, but only moderately so. Average gains and losses are of similar magnitude, and the t-test statistics are relatively low, indicating limited statistical confidence. So, our practical problem, which is a simple buy the stock strategy, requires directional accuracy. If we are wrong too often, losses quickly offset gains. This is the problem of traders. Transaction costs, slippage, I would say even more, and regime changes can easily eliminate that edge. So, what we have to consider, missing just one trade out of 3 can destroy a large part of the expected return. And this makes the strategy fragile and difficult to monetize consistently. So the challenge is not finding a seasonal edge. For this, we have SeasonHunter. The challenge is designing a structure that can survive inevitable forecasting errors that we will have. So, just to continue, let's see why a traditional long stock approach struggles with weak seasonal signals and why directional errors becomes so costly. In this example, here is quite clear. It's a quite clear example in which we have just 20 recurrences. What does it mean? That even if we have 75% of the times in which we have a good tendency on increasing prices, we have just 20 samples that, for a statistical point of view, and for sake of clarity, wouldn't be enough. Okay, this is the bad part of our coin. But there is a way, let's say, to add some edge on top of this. But first, let me talk about the limit of linear strategies buying the stocks. In this case, of course, for instance, a long stock position has a linear payoff. Profits and losses move 1-for-1 with the stock price. So this means directional mistakes are expensive for us in this case. Okay, there is even an example on the right you can read. I will not deepen that much because I guess it's quite clear what does it mean to buy a stock. Okay, if the stock moves against us, losses grow immediately and can easily offset many successful trades. So, for instance, in this example, we can assume a seasonality with a 60% win rate, average gain is plus 1.4%, average loss is 1.8%. Despite being right more often than wrong, the expected returns remains very small. Okay, this is the problem we have in that case. So let's put this in the real world. So let's sketch the real world problem. Transaction cost, bid-ask spread, slippage. We didn't talk about these aspects, and changing market condition can quickly eliminate that edge. So a strategy that looks profitable on paper may become unprofitable after implementation for all these reasons. And why this is problematic for us? One large loss can erase several small gains. Okay? High accuracy is required just to stay profitable. The payoff profile is not helping us. It amplifies the consequences of forecasting errors, in our case, and statistical robustness remains low. So the problem is not only the quality of the signal, the problem is also the payoff structure used to exploit that signal. So what if we could redesign the payoff itself? Exactly what we are going to do now. Instead of improving the forecast, we can use options to make the strategy more tolerant to mistakes. This is the part in which Fabio comes in. Fabio, let me say just a few words before giving you the word, if you want to add something on this topic or you want just jump in the tool. In that case, instead of trying to improve the forecast, we can improve the payoff structure. So up to now, we have seen that seasonality often provides only a modest statistical edge. The question becomes, how can we monetize the edge more effectively, I would say? One possible answer is the use of what Fabio likes a lot, of option spreads, specifically a bull call spread or a bull put spread. Maybe we have a slide at the end on this topic, Fabio, if I remember well. What is a bull call spread? Okay, buy one call option, for instance, near the current price, so at the money, sell another call option at the higher strike. The result is a position with limited risk and predefined profit potential. This is very important, considering that maximum loss is known from the beginning. First, capital requirements are lower than buying the stock outright. The payoff becomes asymmetric, so we can potentially make more than we risk. So risk-reward ratio would be quite different from buying directly the stocks. And most importantly, the strategy becomes more tolerant to forecasting errors. So basically, comparing the two approaches, what can we say? A linear stock position requires high directional accuracy. A vertical spread can remain profitable even if the move is smaller than expected. The statistical edge does not need to be perfect to become economically meaningful. So, for instance, suppose our seasonality works 66% of the time. Okay, just as an example. Being wrong one trade out of 3 is no longer catastrophic for us. Losses are capped while gains remain attractive. This dramatically improves the robustness of the strategy. So options are not just leverage tools. They are instruments that allow us to redesign the payoff and transform a weak statistical signal, the seasonality itself, into a more resilient trading strategies. And this is the reason because we love to use options on top of seasonalities, like they were two layers of a wafer, one above the other. To finish and to give the word to Fabio, just this last slide, just to point the downside risk aspect that will change a while. The objective is not the objective. Our objective is not to find a perfect signal. As I said, the objective is to combine a modest statistical edge with a superior payoff structure. So let's summarize the journey we are taking in these few minutes. We started with the seasonal patterns that showed a positive edge, but only moderate accuracy. By themselves, these signals are often too weak to support robust linear trading strategies. What happens with the linear approach? That losses can be large, directional errors are costly, for the reasons I said. The edge can easily disappear because of cost, slippage, and market changes. And what changed with vertical spreads? So using options instead of buying the assets. Risk becomes defined and limited. Losses are capped at the premium paid, just the premium paid, if you buy. Otherwise, for selling option, Fabio will say something later. The payoff becomes asymmetric. The strategy no longer depends on being right almost all the time. Successful trading is not about maximizing the percentage of winning trades, not just on this, I would say. It is about creating a favorable relationship between gains and losses. We want to make more when we are right, than we lose when we are wrong. This is about the risk-reward ratio. Most stock seasonality patterns have winning rates between roughly 55% and 65%, something like this. That's often not enough for a simple stock buying strategy, but it can be enough when combined with an appropriate option structure like the vertical spreads that themselves transform statistical information into an operational advantage. So weak seasonality, to conclude, does not automatically mean weak profitability. The real opportunity comes from combining a recurrent statistical tendency, controlled risk, a favorable payoff structure. This is exactly the philosophy behind the SeasonHunter, identifying recurring statistical opportunities and then evaluating how they can be transformed into robust, risk-controlled trading ideas. That's it. If you have a question, of course, we are available to answer. But first of all, I would like to thanks Fabio for having waiting my part of the speech.
It's always good to listen such kind of vision about seasonality, because it brings value in terms of how seasonality is computed, what it means statistically, and also give more value to the tool that we have designed and the platform, because this is not only a simple scanner, it's something more that I'm going to show. And also the fact that some of the operation can be done through options, that is my my primary way of doing trading, then can give you, as you said, so even if the seasonality doesn't go in the direction you like, or it doesn't go up, then you might be right on the trade. So I'm going to share the screen.
Yeah, feel free.
Maybe while I'm sharing, just a few words. So I'm Fabio, and
please.
I'm a physicist, and I've been doing trading for quite some time, and I trade seasonality. and other strategies, but this is one of my favorite. And here I'm going to show you what SeasonHunter is, how to use it, some of the features. Of course, will not be completed. There is much more to talk, but I tell you, you're going to join because it's a single platform where you can find a lot of interesting statistical data. Once you log into the platform seasonhunter.com, we have different tool on the top, and we start with the screener. Okay. And what it does, the screener, according to the filter input, that is like the market you want to explore, the sector, the starting date, from where you want to look for the season edge, the number of historical years you want to evaluate your edge, and the minimum and maximum number of trading days. You can run the filter, and actually the platform is scanning thousands and thousands of possible trades, and finding the best. I would say the best. This needs to be defined what the best is, but it finds the most statistical relevant according to the input you are given. In this case, I want to filter for percentage win larger than 70%, and I want to have only long position, and I want to sort by a parameter that we defined as a score. The score is the combination of percent win, the average profit, and how those during the years has been changed. Okay, sort of diffusion of the statistical edge. So in this case, we see a list here. So the list is very comprehensive. There is the most relevant information here. You can even change and being in the calendar view. So this is kind of interesting because you can calendarize your trading. For example, you know that today might be those opportunity. Then in 1 week, there will be this opportunity. Okay, there is the ticket here, and there is also a sector breakdown. So from time to time, there is a sector that actually have more opportunity than others. This allows you to do a bit of
the best, one of the features I prefer, I would say.
Okay, nice. Yeah, this actually, if you do other stuff, it's like trading is, there are a lot. So there are people doing full-time trading, but people that they do trading, but they dedicate a few hours a day. So having a calendarized approach is very interesting, I would say. Yeah, I agree with you. Okay, now let's look on the data. So now, for example, there is some ticker here. There's the start of the season, the end, the length, the number of days, the number of trades, percent which. If I click here, then something happened. So some data is being shown in different way, and we are going to discuss. Let me remove for the second here the year to date, just to make a clear and clean graph. So the first is the seasonal tendency. So how on all the historical lengths of the ticker, in this case Microsoft, it's been going from the beginning of the that is trading on the market till now, and this is done a statistical tendency, so the cumulative daily return average for all the historical data. And then here in the orange part is the pattern that has identified. Okay, this is the pattern, but we need to still to see if this pattern is robust or not. In this case, we go a bit down, we go a bit further, and then we analyze what happened with profit and the yearly profit. So this is the bar. I would say more green is better, means that more times has been in this time frame you got a win, and then there are also red bars. Interesting also is like to see the behavior, the change in the behavior. For example, in the past, this was quite strong. Then it was like a normalization during the recent year. But in the recent, I would say 10 years, this pattern has been consistently winning. On the right side, we have some heat map. The heat map give you a bit of stability. Usually, you might be right on the direction, but from time to time you are not acting on the same day. You could act different days. So here you have a starting day on the right, on the x-axis, and then you have the Windows lens. So for example, if you shorten the window or you make a longer window, of how the percent will change. And actually around the date that is being selected, you see some change. So if you move horizontally here on the Microsoft, actually going tomorrow or the day after, so it's already between 65 and 70. This also also according to the statistics that we have identified, that works. And also moving horizontally, you move the window length. So if I go longer or shorter with this pattern, and the average profit, in average, how much has been gained or not. Here you have a bit of the cumulative profit. If you have done this strategy every time, so you have opened a position at this date that actually, let me remind me, is like 11th of June, and you close this on 16th of July, this is the pattern. And this, you see the first part, right? The first part is actually the one that is, this pattern was not working in the past. So it was maybe a bit less profitable, but it's becoming now. And you can see also, I mean, this is interesting. You said, okay, I want to go deep. I want to see what happened trade by trade. So you can select the trade and then you have a significant plot here. Okay, this actually...
I can see, Fabio, all the
run-up
and the drawdowns on each of the operations. So on each of the years in which you have measured the seasonality. So it's very interesting also to see the dynamic developing on this.
Yes, exact. And also, I would say, coming back to, you mentioned options, right? If you think about this trade, the trade of 2025, actually it moved very, very little, 0.47%. If you buy the stock and then you sell after 35 days and you get 0.5%, it's like within the slippage or within the...
Wouldn't be that much.
Yeah, it will not be that much. But if you have a vertical spread and then the actually the stock did move, okay, you have suffered a bit here because it was going down and maybe it's out of your range of the vertical spread, but then it goes up and then at the end it closed more or less on the same price. Then again you have quite decent win here, okay, even if it's seems very little. Okay, I actually didn't show this line. I will show you. This is the year to date. So how Microsoft is going from beginning of the year, and you see there is a bit suffering. There is also, I mean, it happened, but yeah, if you, it might be a good time, right? So it might be a good time. This is, as Giovanni mentioned, it's not a guarantee, but it's like, okay, statistically relevant. Okay, this is one part. But how I want to see also other, so how I work. I want to show you how I work with screener, right? I do the screener, I analyze, I go to here, right? But usually, another thing I do, I try even to sort by score directly. Because as I said, the score is a combination of those metrics. Higher score is better. So
the score there is also... a ticker I like, I recognize.
Which one, Giovanni?
WELL.
Oh, Welltower. Yeah, we have a look at that. Yes. Yeah. What I tell you that even all the metrics here have been very well described in the user guide. Okay, so if you are not familiar, you want to have a reminder, go to the user guide. It's here. You just see what is a score here, and then you have some explanation about. But yeah, never mind. I want to go here and then look on your ticker, Giovanni, here. Well. And this is part of the real estate. It's not starting. It's starting in a couple of weeks, but let's analyze here. So this is the well. This is what's happening year to date, and it's coming to the date of the seasonality. And this seasonality, let me remove the year to date. Actually, it looks very promising, Giovanni. I would say it's not bad. Even if we try to say, okay, let's look only on the detrended part, it's even very well visible. What is this detrended part? Is the same tendency line while we remove the long-term
bias.
Long-term bias. In this case, you see how it goes up. So it's not bad. I'd say it's one of I would say looking a lot in the seasonality. This is one of the trades that I will evaluate. You see a lot of green here. It's a risk cut in your eyes. That's nice for the platform. And again, I mean, there is no comment here, right? I don't know, Giovanni, if you want to comment more, but actually this is very, very strong seasonality.
I would say that is very strong, especially considering the SAR phase of the optimization graph. The fact that you see green means that all the points around moving the date of starting of the seasonality, or even the length of the seasonality on the vertical axis, show another point very close to the one where we start. So stability is quite clear looking to the surface.
Yeah. So that's why we actually, as a quantitative trader as we are, so we like this heat map, right? Because it also stays with the stability, if having moving like a bit of needle, because in trading you always have such kind of behavior, right? So it's you do
And
not
Fabio,
always.
I can count just 6 or 7 times in which the seasonality didn't develop properly a
Uh-huh.
long time. So
Okay.
another sign that probably the statistic here is quite could be quite robust.
Mhm. Well, then let's go. Actually, we can go deep. I mean, maybe I go to the other tool we have. Then we come back here. Okay. Even if there is some comment here. Oh, can we do another screener? Can we do that? Let's do in a second moment. I just want to show you another interesting uh, interesting tool we have built in the platform, and this is called Deep Dive. The Deep Dive is very easy to use. I mean, you just have a symbol there. You put the starting date, the ending date, and then the calculation happened. What is that? So, for example, you have an idea. So you have a ticker. Okay, you want to analyze all the seasonal pattern possible for a certain ticker. Okay. Now that we talk about well, let's put it well here. We can even choose some other, but just because to remember what we did in the previous one. In the screener, just to make you aware of, I don't know if I mentioned Giovanni, but in the screener, all the calculations are done all the historical data available for well.
You didn't, so it's good to reconsider.
In this case, we have 46 trades. That means we have 46 years of historical data, and this is the maximum we have for this ticker. And this is the calculation. But maybe you would like to say, okay, maybe it's too long for me. I would like to see only whatever. I want to calculate some statistic only on the recent years. Maybe, I want to see the last 10 years, the last 5 years, and do a comparison. Similar to kind of, you could think about in symbol, out of symbol, right, Giovanni? So you say, okay, I choose a certain period, and then I check, and then I say the second period, and then I check, and then cross check. So this is also possible.
Yes, a second period of new data known from the previous study that we did. Yeah.
Yeah. So here I just put 10 years of data starting from January 2016. And what we have here, we have the seasonal tendency. And in this case, we have the year-to-date line, 5 years, 10 years, tendency and the trended. That's nice. We have also, we have been going, that's why we go, this is a deep dive, because now we go a bit more further. First, we do a monthly statistical analysis. Each month is analyzed as a single month, and then we have the monthly win rate. So January, February, March, and we see that in the recent years, May, June, July for this ticker has been above 50% of percent win. So that's that tells you something. And September, actually, yeah, 30% of loss. I mean, this is interesting. And this is
something to deepen, I guess.
Yeah. And this is confirmed by also the monthly heat map. You see year by year what happened. And then we see June, July have been quite profitable. And this is how much has been profitable, around 2-3%. That's fine. But we were not happy about this, right, Giovanni? We wanted to go further.
Yeah.
And we wanted to analyze this ticker on this time frame. And we have built an algorithm that allows you to scan among those years, each month of the year, the best seasonal window according to the metrics that you want to define. Let me explain a bit more further. So you have here the minimum length, maximum length. Means that I analyze all the windows by starting from 15 to 50 by step of 5. Then I want to analyze the side. So in this case, I want to analyze long and short, making competition, because actually it might be seasons that you will have to go short on this ticker. For example, September looks in this case. And then I want to search by score, percent win on average profit. So in this case, I choose score. And for each month, you tell me only the best one. You can even choose, I want to say the 2 best and the 3 best. And the mean percentage win. So I go here, run analyze, and then I have another list. This is a pattern results month by month for this ticker during this time frame. And this is interesting, as I said, if you say both, they could even identify time where this ticker statistically has been going down. And again, if you actually sort by score again, you see that this June, it's quite strong. So you have actually the average negative is around 0.1%, as if you say 90% of the percent win. And what else? So if I select, I go deep on the statistics. So I can see here a nice a pie chart where you have the percent win and the number of win and loss trade. On the right side, you have the average profit. And then you have here some sort of percentile analysis where those, all those trade statistic will be placed in terms of percentile. Of course, Giovanni, you could argue that, of course, for 10 items might not make sense, but actually, even for this very short or very short number of trades, it might make sense.
Fabio, this is a way to focus our attention on the last years. That is not that bad, considering that you can make many different analyses. And the thing I prefer on deep dive is the fact that you can compare the seasonality proposed by the screener to all the other seasonalities along the year, to make a comparison, to make a benchmark in terms of metrics, not just a qualitative sense of the quality of the seasonality, but a metric comparison, so a quantitative one.
Yes, indeed. Yeah, nice. Then you have here the bar plot, the year for each year. Then you have the cumulative equity, the drawdowns. You have a comparison with the buy and hold. Actually, this is scaled on the time frame because usually if you do this strategy, you are only 13% of the time on the market. Then we have different tabs that shows more information like the trade history that we have seen also in the screener. You can go trade by trade, and the heat map. The heat map actually it's a bit more information. We have here the heat map for all the statistical metrics that we use to rate the seasonal. Okay, we have the percent win, and we also have expanded. So we have also the Windows lens that goes from the minimum in our calculation to the maximum, that is 5 to 60. So you have percentage win, average profit, the standard deviation of the profit. You have to imagine that this is a statistical, so we compute the standard deviation of, and then the score. That is a combination of these three, and then combined, this gives the score. Higher score is better. And we also see on the score side that actually this season is quite, I would say, stable or robust in this case, even for 10 years. What is the conclusion here? So we have analyzed through the screener, through the screen that on all historical data gives you an edge during this time. Then with the deep dive, you said, okay, you know what? I want to analyze only the last 10 years because for me are more relevant. And then this is a confirmation, some sort of confirmation that the statistical edge is more robust. The other thing is interesting, Giovanni, if you allow me another couple of minutes.
Sure.
So you have seen in the pattern results on the screener some star. The star is
Fabio. Because sorry if I interrupt you. Because
sure.
we have to show something about the new tab you added this week. So I'm so curious to see with you what is possible to do now.
I'm trying to to follow the path I do every day when I try to use SeasonHunter for seasonal edge. Okay. So I go to the screener, then I go to deep dive, and then if I'm convinced maybe I do this when the market is, we live in Europe, we have different time zone. I trade on US market. Maybe I can do this work during my morning, and then in the afternoon I open and trade. That means I have to remember what I did. So there is a possibility to bookmark some trade with this star, and then you click, and then it appears. So here, and then it appears in the bookmark. Okay, in the bookmark we have here the trade that I have saved. I mean, there is also here some trade that I have been doing, some of the edge. You can even
don't show too much, Fabio.
No.
We
What
don't
I
want to
is,
replicate your trading right now.
I did. So actually, those are the one I selected. They're very strong. You can see. I mean, if you believe this is an edge, I mean, it's your own decision, right? At the end here, there is a. Then we go to the market watch right now. I just wanted to go through this tab, but you can even go from here. So, but if I go. Let's go directly through here, because just to make the flow. If I go here, actually what happened? Automatically, I go to the market watch. In the market watch, I see the bar chart. This is the bar chart of the well, and then in orange we see the seasons. The season is also explained here. So we have a seasonality starting from 11th of June till the end of July, and so on and so forth, with some statistical information, and then you see where it starts. So you can even here say, okay, you know what? That looks interesting. Also on the what is happening right now on the price. Since Giovanni, I'm quite of a nerdy guy, so I really like, and also I like doing such kind of trading. So I think very useful also is this tab seasonality, because it can even show you right now what has been in the other tab. It can be even shown here. But it's not only to show this. I can show you also another way to work with this market watch in terms of seasonality. And then there is also a tab here that goes back to the deep dive.
Fabio, can you go back to the graph of the stock, please?
Sure.
Yeah, because another thing I would like you to underline would be if you unzoom just a little bit, you will be able, if I understood well, all the seasonalities of the years.
Yeah, exact. Yes,
So you can compare. You can make a first comparison of the dynamics developing year by year.
Yeah, you can even change. I know, Giovanni, you like weekly charts.
The weekly, I prefer the weekly one. Yeah.
Yeah, the weekly and the monthly. I mean, the monthly don't show too much because it's a month, but I think you can play around. You can see even the tab here, some indicator. I mean, it's not complete, but there are the most used indicator. And Giovanni, I give you a question, right? You know me, how I trade. What do you think it's the most favorite indicator for me?
For you?
For me,
in your opinion, probably one of your preferred indicator would be the simple moving average to 200 for the tendency of the hedge funds, for instance.
Yeah.
Hopefully volumes as well. I don't know, or ATR or MACD.
I usually tend to make. Those are the one I use. You are right. That's why they are here. But I also look. Also in another way, right? So I trade options,
feel free.
And I want to know if I sell some put, okay, just to tell you where it stands in the graph. So I can put here a graph like 200, and then it shows me directly the level. This level is minus 4% from the close of the previous day. And then I say, okay, now I see where I have to put my structure, where should start. But we'll be back here when we talk about how we use this information to go on the market.
Very interesting.
So here, it's not only that. So this market watch, we can watch everything you like, from the Dow Jones, NASDAQ, MIB, Italy, UK. You can choose for a ticker. I mean, it's like Apple, and then see here. The interesting part is that even here, you can see the seasonality. So, I've been back from the market watch, I've been here, and then we have seen the bands for the seasonality because this has been selected. But you can see here it works also that you have the seasonal tendency. You can even you can, you know, if you are lazy somehow, you can even look at this graph and then go ticker by ticker. You know, it's like, okay, this is
I like
what is
this.
happening now.
You can bookmark whatever you want in that case. Yeah.
In this case, you can have some kind of high understanding of the ticker, and then my recommendation is to get, you know, I like Amat. Okay, the Amat is going strong this year.
Let's go to the deep dive then, I guess.
Genau, yeah. That's what I would do. Then I go to Amat, and then I do all the things I've been doing before.
Oh,
so
nice.
This is like playing around, discretionary looking at the graph, and then I said I want to analyze, go back, and I go to the deep dive and I explore more.
Cool.
I'm not sure. The last thing is, I mean, this might play a role. Maybe will play a role in the future, Giovanni, because we plan a lot of new features. Maybe the sector analysis might be. This is just some view of what the sector is. We track the ETFs sector, and then here is like, I mean, you have seen this several times also in other websites and so on. But we put it here just to complete, because the seasonal statistically has some caveat. The means is, if you build a portfolio, maybe you would like to diversify also in the sector and so on, but this depends on how you trade. But this is information I found very useful.
For instance, you just want to have an indication of the environment in which you are moving on. So also just for that reason could be a good point to take a look to the sector analysis, I guess.
Yeah. Okay, I think I will stop here. We will go deep on the time, but I want to just stop and see, Giovanni, do we have questions? Maybe in the chat
yes, there is a couple of questions. The first one was from Cesare. Ciao, Cesare. One big difference is the required budget comparing stocks seasonalities and options seasonalities. Of course, Fabio, I don't know if you want to add something on this point, but of course, the leverage is quite completely different if you buy directly stocks or options. So in some sense, but in general, it's better to build a structure on options if your portfolio is not that big.
Actually, it's so playing with options or trading options can be even for kind of small budget. I mean, if you would like to start, of course, options is a complicated instrument, you have to understand. But yeah, that's true. It's the capital required. I would say easy. I mean, it's not a recommendation, as you said, right? But easy. If there is an edge that, you know, this can be long. I mean, this is a long edge. I would just, maybe you buy a call option, wait for a couple of weeks. If it goes, then you can close the position and get.
So just the premium in that.
Yeah,
case.
it's very easy. You know, it's like could be
super
this,
easy.
or could be a vertical spread. But this is a matter of choice.
Then there is another question from Gaetano. Ciao, Gaetano. Welcome. There are some compliments for the tool. Thank you so much.
Thank you.
In the deep dive, this is the question. In the deep dive section, is the seasonality calculated using the entire available history or only the selected X years of historical data?
Oh, yeah, that's a good question. Actually, maybe it was not mentioned in the proper way, but I would say the seasonality is calculated using the starting date and the ending date given as input. Then this graph is taking consideration those dates. Let me explain to you here. Let me do right now, like 2000. Okay, 2012. Okay, we have 14 years. And then I remove year to date just to make the plot clean, because this time of the year, Amat was going very, very strong. And remove the trended just to make it clean. So this seasonal tendency, the green line, is calculated on the starting and ending date that you have given. Okay, in this case, you have 14 years of data, and then the other line are 5 years, 10 years. If the ticker doesn't have such history, of course, it will not be computed. That's what I think it might be clarified. And even when you go the deep dive here, I would say the pattern scanner, those patterns are calculated again using this input, the ticker and the starting date. And it can even be seen here, right? If you do pattern scanner, there is the information about the ticker, and then from which date has been calculated from January
Yeah.
till June 11. Okay.
So basically,
think-
the deep dive, just answering to Gaetano, is calculated in the range you define at the beginning of the page. So from the starting date till the ending date. This is a way, Fabio. You have talked quite well about this. It's brilliant. The reference that it seems to be like it was an auto sample in some sense, in which you take a portion of the historical data you don't want to consider in your calculation, defining the seasonality itself from the screener, and then you deepen on that particular side, on that particular range period of time. Yeah.
Yeah, this can be, I'd say, just to make some other number, right? So you can even specify this, and this is 11 years starting from January 2012 to January 2023. And then you can compare with the more recent data. So you can really move this window of statistics. Okay. Of course, it makes sense. You don't do 1 year, right? You just make more. Otherwise, it doesn't make sense.
Course.
It's not a
it's
seasonality.
Like gamble. It's like a gamble.
Yeah, but that's the thing. And as I said, so this is a complete platform where you can play around, see what's happening. The market watches was the last thing we have added just to see what's going on. I really like because you can maybe in the bookmark here, you have your bookmark list that you can see if something is going on with information from the seasonality.
There is another question for you, I guess, from Cesar again.
Yeah.
Okay. It's a question about the budget you need to open a bull put spread or a bull call spread. He's asking if a very low portfolio budget could work or not.
I think it's okay. That's we go a bit more technical here. Of course, this could be. Let me give you more. So a bit more an example. That might be.
And then I will have to go to the Russell 2000.
I would say, knowing that the last, let's go Apple, right? Apple closed around $290. Now, if you know, okay, there is a season starting from of Apple, then I have to how much. So then in your strategy, to think how many stocks I buy. If I do options, then I go to the option chain, build my structure, and see if the payoff, like the risk reward, as you mentioned, is favorable or not. You can control what is the maximum loss with options. For example, if you open a bull put spread, you know that the maximum loss is the difference between the two legs that you are building. It could be like 10 points, $1,000, minus the credit that you receive for opening this bull spread, like $300, and this is the maximum you have is $700. The way you want to manage your risk, it's I would say it's your own responsibility as a trader. We are not going actually to go deep in suggestion what's the best or what's not. What I can tell you is that the seasonality is an edge. If you can play around and you know how to make on the market, this can be profitable. And then according to also what Giovanni discussed is that with options, you have several advantages compared to buy the ticker itself. Buying a single ticker is also difficult. You have to make a portfolio of seasonality just to
Sure. No, sorry, I was just adding that in the question you can read a certain amount proposed that probably wouldn't be enough, but a part of that, the important thing to consider is that we are not talking about doing a single operation here, but to combine an entire portfolio of seasonality, also to have the third edge, that is the portfolio edge, on top of the option edge and on top of a seasonality edge. This is the way we use to consider this kind of opportunities. Okay. Fabio, I would like, I suggest to go, if you can go back to the screener, because I was playing with the Russell 2000 this afternoon. Okay.
Okay.
Yes. So I suggest just to make a screener on Russell 2000, 30 years by default. Okay.
Okay,
Then 50.
2000. All
Yeah.
sector from today, 40 years.
Yeah. You can go like this with the
Okay.
default. Yeah. Let's
Yeah.
see what will happen. Okay. I wrote down a couple of tickers. The first one is the first one, the CITC.
Okay.
Exactly. You can order by score.
Sure. I got the by score as
Okay.
oh yeah, I also had some
BFS is the other
BFS.
one. Yeah, BFS. Or you can see
Let's-
THFF, or even the first one would be a
BFS. Okay.
Yeah.
One thing I want to mention, Giovanni. Okay, this is something interesting. So, what I did here? So you are scanning the Russell 2000. You know how many? I mean, Giovanni, this is important. You know how many tickets there are there, and we
Yeah.
are scanning thousands and thousands of different trades among all the Russell 2000.
Yeah, it's very interesting.
This has
Even if we have to say, being traders, me and you, that many of these stickers wouldn't be enough liquid, I would say. It depends on what kind of operational activity you want to mount on. I guess you can go. This is a very short window. 10 days, if I'm not wrong. Okay, just 10 days with 84% of percentage win. It's
Let's
quite,
look here.
Yeah. And in the last 2 years, things went right in a good way. And in the last 5, 3 times not, but not with that loss, unsustainable loss.
No,
So,
we can look at here. I mean,
yeah.
let's look here. This was the profitable trade. This was a profitable trade. This was non-profitable. It looks like
Yeah. The thing
very
you were
little.
saying, you were underlying before, the fact that with options you wouldn't have lost a lot, or no, you would have won something. So probably here again, yeah. While buying the stocks, things are completely different.
Yeah, indeed.
Because you have a risk for, okay, just 10 days, not that much, but in any case, you wouldn't have gained anything buying directly the stocks, while with options, you could have a gain.
Maybe, Giovanni, your approach is not bad because actually it's more like on the short term, like speculative. There is a way to
I'm a trader, Fabio. I'm a trader, from the CME world. So yes, I search for very, very short opportunities, even if seasonalities many times are developing slower. So
this is 20 days, the one from GSBZ.
Yeah.
What's the name of? Great Southern Bank Corporation.
Yeah, Great Southern Bank Incorporation. Then I have another one that I was pointing before. Let's see the list. If I find LXP, the third one.
Yeah,
LXP Industrial Trust. This is a longer opportunity, but very, very stable for person win heat map.
Oh yeah.
Yeah, just take note for the next days. Okay, I repeat, this is just for educational purpose. Remember the disclaimer at the beginning. Fabio, I would close our live, apart of answering to other questions if there are. I would ask you to stop sharing the screen and we can go back to the slides just to point the final concepts together.
I lost you for a couple of seconds, Giovanni, but I think you are back now.
It was me, just me, yeah?
I don't know. It seems like, but yeah, go ahead.
I guess so. But okay, I'm checking just the online on the YouTube channel. Should be
no, it's okay. I'm monitoring here, so you are online there.
Thank you so much. Okay, then I can share the screen again, just to give you the opportunity to talk about seasonal edge. If you want to tell us some final
Sure.
points, just
Yeah,
concluding. Yeah.
on very short. Okay, because once you identify the seasonal, how you're going to play it? Okay, how you're going to trade that? We have mentioned that one of the things could be the buying the underlying. That is, it's really a directional exposure here. So if it goes up and you are on long, then you gain money. Otherwise, you lose. It's very simple, but it requires a bit more higher capital, as was also commented out before. You can even identify long and short, and then you can play relative value, maybe between two stocks. Then the one I prefer is options. They have defined risk and flexibility. You can, and since I like credit spread, then I get an advantage of the time decay. More time it passed, then I gain the gain. But this requires a bit more. It's efficient in terms of capital required, but you need a bit to manage the trade somehow. Okay, so it's not like you live and run. So it depends. You can have a call spread or put spread on, and in this case it's managed differently. You can even play calendar spread. You have to exploit the time, but it's just a list here you can read. Go ahead, Giovanni. So we have seen.
So you have the strategy construction, talking about how it's possible to construct the strategy itself.
Yes.
You have touched these points during the live, I guess.
Yes, I also showed you right where to go. So you go to the screener to identify the pattern, then you look for the seasonal to see if there is some kind of robustness on that. Then you can make more a deep dive and verify the persistence. And then you have identified your trade, you put in the bookmark, and then you go and you can open your trade. The key elements here, and then also Giovanni, I think you agree with that, you can add your point. But for me, it's like important is to see the historical frequency of the pattern. So how many times has been up or down, the average negative return and the percent win, because of course the percent win is 1 point, but you want to see in average if this has been losing a lot. And also the robustness in terms of score that combines all the metrics in one metric. Yeah, those are the metrics I will evaluate. Maybe we have, Giovanni, next we have an example, I think, that was one of the recent trade.
Can you see the slide?
Yeah,
I have some network problems at the moment, Fabio, but you should see the bull put spread slide right now.
Yes, I see that. So actually, I use this as a bullish credit spread. So it profits if the price stays above the short put. Now the thing is, how do you going to play? How do you going to choose those strikes? It really depends, but I usually looking on the downside. I look on the average negative, and if the average negative is like 5-10% or 7%, I try to put the strike below that, and then this is fixed. Like the long put, that is the protective, that protect me to if the underlying goes below that, and then I sell the put, I do the short put operation in order to, and then this is chosen according to the risk reward I have and the credit I want to receive for this structure. This trade is kind of interesting from the risk reward perspective, because the return to risk is 71%, means that max profit would be around 400, but then the spread between the two strike is 10 points, 1,000. So the maximum I'm going to lose is less than $600. So my suggestion, I mean, this is an example. I would say that once you open this trade, it's important to see how it evolves. And then usually when it goes in the right direction, you maybe don't leave this till expiration. You can take out and then take your profit as soon as possible.
Okay, I guess you ended your explanation about the possibility of working with options with bull put spread in particular. So Just a final message for you that you are listening now, or you will see the recording of the live we did tonight. So first of all, thanks so much for being with us tonight. Thanks to Fabio. This is the QR code with which you can point the QR code. You will be directed directly to the SeasonHunter.com website, in which you can apply with a free trial account. You will have the possibility to play with the tool for 1 week, if I remember well, Fabio. And
all the features are enabled, Giovanni.
Yeah, this is a very important thing that we have changed from the last time. You can use all the features inside the tool, all the features you saw tonight as well. So the screener, the deep dive, the market watch as well. Pointing just the QR code will be possible to do that. And then there is also, if you want to apply to the offer that we have right now on the tool, there is also a coupon to use and to lower the price for the first month or year, if you are going to use this opportunity. Okay, so what else, Fabio?
No, I'm fine. I just put it in the chat just to remain there. So the link and also the promo code. So there is this promotion. So I just put the code there so they can copy and paste directly.
Yes, I guess I ask you if you can put the link and the code also in the YouTube, maybe, or later, just to be sure.
Yeah, it's there. It's there. It's there.
Ah, it's there. It's still there. Okay, great. So we made just a little bit over 8 p.m. I'm so sorry about that, but I guess we were discussing very interesting topics with Fabio. So again, thank you so much for being with us. We are going to organize a second webinar in English for the Asian friends next week. Keep in touch and see you soon. Bye.
Bye.